Let's switch gears and talk a little bit about global developments and, of course, what's been happening in the commodity universe. Investment guru Jim Rodgers joins in to speak with us. Jim, morning. Good to have you on the show. It's been a big run for equity markets first and foremost. What have you made of it?
Well, with governments around the world pouring huge amounts of money into the world economy, it's got to go somewhere, and the easiest, best way is usually for it to go into financial markets.
It's also come concomitant with a big fall in the dollar, Jim, and there is a call now for greater weakness in that currency. Would you concur?
Well, I am not optimistic about the U.S. dollar long term. In fact, the U.S. dollar long term is going to be a disaster. However, there are many people in the world right now who are terribly pessimistic about the dollar, including me. Many people have sold the dollar short, so it would not surprise me if there were not a big rally. If a rally comes, I plan to sell that rally, but I'm not selling the dollar down here.
Jim, hi, morning. What's your call on the strength that the yen has seen then, and the kind of nervousness that most of those export-oriented markets are exhibiting? Where do you see it headed from here?
Well, I own the yen, so I'm very pleased to see the yen going higher. Various things are happening in Tokyo or in Japan. You know, they are the second largest creditor nation in the world. Plus, their government has given big incentives for people to bring the yen back into Japan. Billions of yen have been invested outside of Japan, and now there's good reason for them to bring it back. So you have a new government, you have incentives to bring the yen back, you have the carry trade unwinding. There are many reasons for the yen to continue to go higher. I own the yen. I hope it does go higher.
What about the base metals then? We've seen a lot of volatile moves across most of those base metals. Where do you see them headed from here?
Well, base metals have had a huge rally, as you point out. I know I wouldn't be buying the base metals right now. I do own base metals. I'm not selling base metals, but I don't like to jump on a train which is moving at a rapid rate. And that train, the base metals train, has gone up a whole lot in the last 9 or 10 months, so I'm not doing anything except watching.
You've tracked and watched the Chinese market as well for many years, Jim. There is concern on where that market might be headed and why it's lagging the performance of others.
Well, I would hardly call it lagging the performance of others. The Chinese market doubled between the fall of last year and say, August of this year. So it was one of the strongest markets in the world, if not the strongest market in the world. It has calmed down here in the last month or two, but anything that doubles in 10 months should slow down and consolidate. Who knows where it's going to go from here, but I own Chinese shares. I have not sold any of my Chinese shares because longer term I'm very optimistic about China.
From the emerging and BRIC market, what would be your top pick then right now in terms of markets?
I wouldn't buy any of them, right? I would never buy the Russian market. The BRICS are just some kind of artificial, thing which some marketing people put together. I wouldn't ever buy the Russian market. China I own. Brazil is a natural resource-based economy, and it's being better managed these days than it has been in the past. So Brazil probably has a good future. I don't own any Brazilian stocks. And the Indian stock market, as you know, has run up a lot in the last year or so. So I don't think I would buy it either. I'm not buying shares anywhere in the world as we speak.
What about gold, Jim?
Well, I own some gold, and I'm optimistic about the price of gold. I don't think I would buy it either. Gold is near its all-time high. I think I'd rather buy silver, for instance. If I had to buy a precious metal, I'd rather buy silver than gold. I'm not buying either at the moment. I certainly wouldn't sell any precious metals. If they go down, I plan to buy more and maybe a lot more.
How is the fund flow situation looking, Jim? At least for our markets, there is a lot of appetite from foreign investors. But in general, how is the mood looking across that front?
I'm sorry, which front? I heard every word you said except which country, which market?
The entire fund flow situation.
Again, the entire... I'm just not hearing you. This thing is not working.
I'll try again. I was asking you about the entire fund flow situation, the redemption pressures, if you're seeing any across emerging markets.
Oh, emerging markets. Well, I'm not buying any emerging markets. If I were going to buy an emerging market, I recently went to Sri Lanka to look at Sri Lanka as an emerging market. I have not bought anything there. But most emerging markets, the Sri Lanka market has been extremely strong in the last year. Most emerging markets have been very, very, very strong in the past year. After the collapse of the fall of 2008, most emerging markets have gone up a lot. I don't like to buy anything that's gone up a lot. I'm very worried about the Western economy. I don't think that the problems are solved in the West. And if you start seeing more problems in the West, it's going to have an effect on most markets around the world. It's certainly some of the emerging markets. The emerging markets which have a lot of raw materials or commodities will probably do better than the others. But again, even they will be affected if we have more problems in the West.
Thanks, Jim, as always, for stopping by and speaking with us. That's the view on commodities and markets from Jim Rodgers. Important conference coming up where he will be speaking along with some others. In case you want to be part of it, these are the details coming up on news.